The market is a wild beast. It's unpredictable, untamed, and often leaves even the most seasoned investors scratching their heads. One moment it's soaring to new heights, and the next, it's plummeting into the depths of despair. The stock market is a living, breathing entity that reflects the collective emotions, fears, and hopes of millions of people around the world. Sometimes it acts like a bucking bronco, throwing investors off. The volatility can be nerve-wracking, with prices swinging wildly in response to the latest news or economic data. It's during these times that the market tests the mettle of those who dare to ride it. Investors must hold on tight, weathering the storm and hoping for calmer waters ahead. The global economy is at a crossroads, with markets surging despite looming tariff threats. Are investors ignoring warning signs, or is this a calculated move? Today, I invite you to traverse the shifting tides of markets and global forces, where fortunes rise and fall like the winds of fate, where the S&P 500 dances on a precipice, tariffs loom like gathering storms, and gold glimmers as a beacon of refuge. Let us embark on this journey with the curiosity of a sage and the vigilance of a general. In this video, we break down market trends, corporate strategies, and ancient wisdom from the Jing and Sun Tzu to help you navigate financial uncertainty. Stay tuned to uncover key insights that could shape your investment decisions. What are the potential consequences if markets underestimate trade risks? Could a full-scale trade war significantly impact global growth? What are the warning signs of an impending market downturn? What steps can investors take to protect their portfolios from trade policy shocks? Don't let market uncertainty catch you off guard. Subscribe for expert insights on economic trends, investment strategies, and financial wisdom from history. Hit the like button and share your thoughts in the comments. How are you preparing for potential market turbulence? Right now, it's more like a determined ox, plowing ahead despite the dark clouds on the horizon, casting a shadow over the market forward slowly but surely, even as it faces numerous challenges. This steady progress is a testament to the resilience and determination of investors who believe in the long-term potential of the market. We've got tariff threats looming large. The ongoing trade tensions between major economies are creating uncertainty and concern. Tariffs can disrupt supply chains, increase costs for businesses, and ultimately impact consumer prices. These threats are like dark clouds on the horizon, casting a shadow over the market's future. The trade war with China is far from over. Negotiations continue, and while there have been some positive developments, the situation remains fluid. The outcome of these talks will have significant implications for global trade and economic growth. Investors are closely watching every move, trying to gauge the potential impact on their portfolios. Yet, the market keeps chugging along. Investors are showing resilience. They're not panicking, they're buying the dips. This tells me something. It tells me that despite the challenges, there is a strong belief in the market's ability to recover and thrive. This resilience is a key factor in the market's continued progress. It tells me that there's underlying strength in the market. This strength is built on the foundation of a robust economy, innovative companies, and the unwavering confidence of investors. It's a reminder that even in the face of adversity, the market has the potential to bounce back and reach new heights. Now, don't get me wrong, I'm not saying that the road ahead will be easy. There will be bumps along the way, and investors must remain vigilant. It's important to stay informed, diversify portfolios, and be prepared for potential setbacks. The market's resilience doesn't mean that it's invincible. I'm not saying it's all smooth sailing ahead. The market is like a ship navigating through stormy seas, and being proactive can help navigate these challenges. But economic indicators, geopolitical events, and unforeseen crises can all impact the market's trajectory. Investors must be ready to adapt to changing conditions. There are still plenty of risks out there. From inflation concerns to potential interest rate hikes, the market faces numerous headwinds. It's crucial for investors to be aware of these risks and to have strategies in place to mitigate them. Staying informed and being proactive can help navigate these challenges. But the market's resilience is a good sign. It shows that investors have faith in the long-term prospects of the economy. This optimism is a driving force that can help propel the market forward, even in the face of adversity. It's a reminder that despite the challenges, there is always potential for growth and recovery. It means that investors believe in the long-term prospects of the US economy. They see the potential for innovation, growth, and prosperity. This belief is what keeps the market moving forward, even when the path is uncertain. It's a testament to the enduring strength and resilience of the market, and a reminder that, in the long run, the market has the potential to overcome any obstacle. Now, let us weave this into an emotional and mysterious tapestry. The markets pulse with a restless heartbeat, a saga of defiance and dread unfolding beneath a sky thick with omens. The S&P 500's ascent feels like a warrior's boast before battle, proud, yet shadowed by doubt. Thunder rumbles in the distance, tariffs and inflation coiling like serpents ready to strike. Investors, emboldened yet wary, dance on a knife's edge. Their drop makes a temporary recovery. It's a way for the athlete. The market steps back to reassess and strategize, stronger on the other side. They're buying into companies with safety. They want to minimize risk while still keeping an eye on and create some real bargains. Stocks that were previously out for those diamonds in the rough, with patience and an edge. These movements are not just random, they have a pattern and a name. We call them defensive relief rallies. These rallies occur when the market, after experiencing a significant drop, makes a temporary recovery. It's a way for the market to catch its breath before deciding its next move. It's like the market takes a punch, staggers back, then comes out swinging. Imagine a boxer in the ring taking a heavy hit but refusing to go down. Instead, he regains his footing and prepares for the next round. But it's not a knockout punch. The market isn't down for the count, it's just momentarily stunned. This is a crucial distinction, because it means there's still fight left in the market. It's more of a tactical retreat. Just like a skilled athlete, the market steps back to reassess and strategize. This pause allows investors to regroup and plan their next moves carefully. Investors are getting more defensive. They're not just sitting idly by, they're actively seeking ways to protect their investments. This often involves shifting their focus to more stable, less volatile assets. They're looking for stocks that can weather the storm. In times of uncertainty, companies with strong fundamentals become particularly attractive. These are the stocks that can endure market turbulence and come out stronger on the other side. They're buying into companies with strong fundamentals. These companies have a proven track record of good earnings, solid balance sheets, and strong management teams. They are the bedrock of a defensive investment strategy. These companies have good earnings, solid balance sheets, and strong management teams. They are well positioned to navigate through economic downturns and emerge even more robust when the market recovers. This defensive posture is understandable. Given the current economic climate with its myriad uncertainties, it's only natural for investors to seek safety. They want to minimize risk while still keeping an eye on potential gains. There's a lot of uncertainty in the air. From geopolitical tensions to economic policy changes, numerous factors contribute to market volatility. This unpredictability makes it challenging to make confident investment decisions, but it also creates opportunities. In every market downturn, there are hidden gems waiting to be discovered. Savvy investors know that these periods of uncertainty can be the best times to find undervalued stocks. When the market gets jumpy, it can create some real bargains. Stocks that were previously out of reach may suddenly become affordable. This is the time to do your homework and identify those potential winners. That's why it's important to stay disciplined. Emotional reactions can lead to poor investment choices. Instead, stick to your strategy and make decisions based on careful analysis and long-term goals. Don't let your emotions get the best of you. It's easy to panic when the market is volatile, but staying calm and focused is crucial. Remember, investing is a marathon, not a sprint. Stick to your investment plan and look for those diamonds in the rough. With patience and diligence, you can find opportunities even in the most challenging market conditions. Keep your eyes on the prize and stay the course. Businesses are caught in the crossfire of this trade war. They're facing uncertainty and disruption. But you know what? They're adapting. American businesses are some of the most innovative and resilient in the world. They're finding ways to navigate the challenges. Some companies are diversifying their supply chains. They're moving their manufacturing out of China. Others are finding new markets for their products. This adaptability is crucial. It's what will allow businesses to thrive in the long run. It's also a positive sign for the economy as a whole. It shows that American businesses are not going to let a little trade war get in the way of their success. So, is the market back in risk-on mode? The answer is, it's complicated. We're seeing mixed signals. On the one hand, the market is still going up. Investors are buying stocks. That suggests a degree of risk appetite. But on the other hand, there's still a lot of caution out there. Investors are being selective. They're not just buying anything that moves. This cautious optimism makes sense. The economy is still strong, but there are headwinds. The trade war is a big one. It's creating uncertainty and volatility. Until we get some resolution on that front, I think we'll continue to see this mixed picture in the market. Inflation is a complex and multifaceted issue that affects every aspect of our economy. It's not just a number on a report, it's a force that can shape the financial landscape in profound ways. Inflation is a sneaky beast. It doesn't announce its arrival with fanfare. Instead, it quietly infiltrates the economy, making everything just a little bit more expensive day by day. It creeps up on you. One day you might notice that your grocery bill is a bit higher than usual. The next, you see that your favorite coffee shop has raised its prices. It's a gradual process, but its impact is undeniable. Before you know it, it's got you by the throat. The cost of living tensions, the tariffs are partly to blame, trade policies too. This can lead to a feeling of financial suffocation where every dollar counts more than ever. And once it takes hold, it's a bear to get rid of. Inflation can be stubborn, and reducing it often requires significant economic adjustments. It's not something that can be fixed overnight. We're starting to see some inflationary pressures in the economy. Various factors contribute to this, including supply chain disruptions, increased demand, and geopolitical tensions. The tariffs are partly to blame. Trade policies can have a direct impact on the cost of goods, and when tariffs are imposed, it often leads to higher prices for consumers. They're driving up the cost of goods. When businesses face higher costs, they often pass those costs on to consumers in the form of higher prices. The Federal Reserve is trying to get ahead of the curve. They're raising interest rates in an attempt to control inflation. By making borrowing more expensive, they hope to cool down the economy and reduce price pressures. But it's a delicate balancing act. Raising interest rates for the economy, it's a tough job, and only time will tell. On the other hand, not raising them enough can allow inflation to spiral out of control. They need to raise rates enough to keep inflation in check. This requires careful monitoring of economic indicators and a willingness to adjust policies as needed, but they don't want to raise them too quickly and choke off economic growth. It's a tough balancing act, and the stakes are incredibly high. The wrong move could have serious consequences for the economy. It's a tough job, and only time will tell if they're getting it right. The Federal Reserve's decisions will be scrutinized, and their impact will be felt by everyone. As we navigate these inflationary times, it's important to stay informed and understand the forces at play. Are we approaching a precarious tipping point in the market? Remember Wile E. Coyote? He'd run off the cliff, but he wouldn't fall until he looked down. The market can be like that. It can stay irrational longer than you think, but eventually gravity takes hold. We might be approaching a tipping point. Valuations are high. Interest rates are rising. The trade war is a mess. Any one of these factors could be enough to send the market tumbling. Now, I'm not saying it's going to happen tomorrow, but it's something we need to be aware of. We need to be prepared for the possibility of a significant correction. Can inflation be easily controlled once it starts rising? How are companies adjusting to potential tariff costs? Should markets be more attuned to the risks of a trade war? Given the potential ramifications, one would anticipate markets to more heavily factor in the risks of an escalating trade war, a development that could stymie global economic growth. The current resilience suggests either a belief that worst-case scenarios will be averted or an underestimation of the possible fallout. Here's the thing about the trade war. The market isn't really factoring it in. It's like we're all standing on the train tracks, watching a freight train barreling towards us, and nobody's moving. We're just assuming it's going to stop at the last minute. The trade war is a real threat to the economy. It's already hurting businesses and consumers, and it has the potential to get much worse. If we don't find a way to resolve it soon, it could derail the entire economy. What management strategies can help businesses navigate economic turbulence? Believe it or not, we can learn a lot about navigating uncertainty from ancient wisdom. Take the Jing, the ancient Chinese book of changes. It teaches us that change is constant and that we need to be adaptable to thrive. Then there's Sun Tzu's The Art of War. It emphasizes the importance of strategy, discipline, and knowing your enemy. These principles are just as relevant in the business world as they are on the battlefield. We need to be strategic in our investments, we need to be disciplined in our approach, and we need to understand the risks and challenges we face. What historical parallels exist for today's market uncertainties? So, how do we navigate this market environment? First, don't panic, stay calm and rational. Second, be diversified. The tale begins with a restless murmur across the markets. The real question is, when does it finally look down? Investors, bold as they are, shrugged off the spectre of tariff threats, nudging the S&P 500 to yet another record close on Wednesday. Yet, beneath this triumph, the ground trembled. Markets churned and wobbled, only to rally in the afternoon as the FOMC minutes offered no hawkish sting. Here, the Jing whispers hexagram 51. Jing Daiduo Yi Sujie, mandamas of a greater reckoning. Resolution arrives. The Gen hexagram has Gen on both the top and the bottom. The meaning of the hexagram is that it is directly derived from the three-stroke hexagram Gen, which means change, vibration, shock, and startle. It is extended to mean a wake-up call, awakening, and awakening from fear. When changes come, people are often frightened. If they can be alert and self-reflective, they will be able to prosper. That is why it is said, Zhenzhe, Jinghai Daiduo Yi Sujie, Manje Ye. Shock is used to shock the lazy and idle people and awaken them. This means that shock is used to awaken the lazy and idle people's hearts. Sun Tzu concurs, advising in the art of war, in the midst of chaos, there is also opportunity. The conflict emerges, a market climbing a wall of worry, buying dips while eyeing the exits, teetering between bravado and dread as inflation risks tilt upward and trade uncertainties brew. Are these the early tremors of a greater reckoning? Resolution arrives, albeit fleetingly. Is this what we call a defensive relief bounce? Indeed, it seems. It may be difficult at first, but if you have persevered, yet the air hums with unease. But, granted a reprieve, investors seized the moment as if adhering to Sun Tzu's counsel. The leader who wins makes many calculations in his temple ere the battle is fought. Businesses, however, brace to pass on tariff costs, a subtle defiance of the calm. The Yi Jing shifts to hexagram 3, Shui Le Tun, difficulty at the beginning, where order emerges from chaos through perseverance. It may be difficult at first, but if you have perseverance and a spirit of persistence, your future will be immeasurable. However, you're often not understood by others and fall into loneliness and depression. Your career will therefore be in a difficult state, and you will need the help of virtuous people to get out of it. If you can approach life with an optimistic spirit, you can achieve success. The rally holds, but its legs are frail. Neither a victory cry nor a plunge into despair. The market for now finds footing, yet the air hums with unease. But a new conflict stirs on the horizon. Can inflation be tamed once it rises again? I doubt it, for the bottle is cracked, and tariffs threaten to pour fuel on the flame. The market sprints forward, a wily coyote heedless of the cliff's edge, while global peaks dazzle and trade tensions simmer. Hexagram 36, Ming Yi, darkening of the light, warns of hidden peril. Wisdom lies in shielding one's brilliance from looming threats. The symbol of the Ming Yi hexagram is light in the ground. Light is hidden under the ground, which means darkness. Since the world is dark and in chaos, good people will be eradicated. So when you get this hexagram, you don't need to consider whether you can be prosperous and successful. But it is more important to think about how to escape and protect yourself. Sun Tzu's stratagem echoes. He who knows when he can fight and when he cannot will be victorious. Investors wager the tariff storm will dissipate, yet the stakes grow dire. A misstep could unleash a trade war, slamming global growth. The dollar idles, yields pause, and oil markets falter, blind to a flood of Russian crude should sanctions lift. Gold, meanwhile, leaps at tariff whispers, a sentinel of chaos. Resolution unfurls like a fragile dawn. The rally steadies, a breath held against the storm. Wisdom prevails, if only for a moment. Calculations are made, positions held, and the market finds its rhythm amid the discord. Yet this is no tale of conquest, it is a pause, a gathering of strength. The sage sees order in the tumult, the general plots his next move. Relief washes over, but it is tinged with the salt of suspicion. Can this fragile peace endure? The mystery deepens as new shadows emerge. Inflation. Third, be selective. Look for companies with strong like dark clouds over a restless sea. The market races forward, blind to the void below, its exuberance a mask for creeping peril. Gold glints a harbinger of tumult as oil quivers before an unseen deluge. The wise shield their light, the cunning weigh their moment. Will the storm break or will it pass? The answer eludes us, a riddle wrapped in the winds of fate, whispering of battles yet to come. Don't put all your eggs in one basket. Third, be selective. Look for companies with strong fundamentals. Fourth, be patient. Don't try to time the market. The market is going to be volatile in the months ahead. There are going to be ups and downs. But if we stay disciplined and focused on the long term, we can weather the storm and come out ahead. Thus, we stand at a crossroads where hexagram 51's thunder awakens, hexagram 3's patience steadies, and hexagram 36's caution guards. Sun Tzu's timeless strategies, seizing opportunity in chaos, calculating before conflict, and knowing when to stand, guide us through this enigmatic fray. The markets, like life itself, are a battlefield of emotion and mystery, ever shifting, ever alluring. What say you, dear? Shall we watch the cliff's edge together? Remember, fortune favors the bold, but it also favors the prepared. So be bold, be prepared, and stay bullish.